So you're pitching a VC and the VC says, if you knew with 100% certainty that you were going to raise significantly more money, what would you do? If you want to know the answer, stick with me now.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
So what do they mean? Things can go unexpectedly well, which is great, right? But how are you going to manage high growth? This is the flip of the question that we just went through of what you would do if you couldn't raise again. This is a meta-level question that challenges you to understand all the drivers of your business. And if you don't know what you're going to do, you're really going to struggle. They're tests to see how you would build a substantially sized business a lot faster than you had originally presented to investors. Now, investors want super high growth companies. So if you're crushing it, then you might really find yourself receiving a 20 million plus check at some stage. And you're going to have to be able to figure out how to spend that smartly. If you don't know how you're going to be able to scale things, allocate large amounts of cash to the marketing channels you are utilizing. Scale your tech infrastructure and develop your product roadmap. You simply will not be able to cope. A smart team will have thought about the downside, the base, as well as the upside scenarios. This could be a great moment for you to show you're worthy of getting a larger check. Now, maybe the investor's thinking, there's a lot of promise here. They figured out the unit economics. What if they raised 3 times more and just really went for it? So what do you need to say? Thanks for asking that. We were hoping you would. We've already mapped out a plan. We see a lot of opportunity in the enterprise sector. They fundamentally are underserved. The issue with the enterprise sector is that there's really long sales cycles. Companies typically can't afford the 8 to 12 months before the cash starts coming in, the professional services you do, the infrastructure we need to deploy. However, if we had 3 times more money, we would be able to address this. We feel that we've raised twice the amount of money, we'd be able to make a decent effort into really penetrating this segment, which we think would be incredibly profitable. Now, if we had 3 times the amount of money that we're currently asking for, I believe we would be able to afford a really strong VP of sales and make this scalable. Furthermore, we can double down on the acquisition channels identified for the SME portion of our customers that we're targeting. We have an LTV of about 3.5x and a payback period of 8 months, which, well, according to industry benchmarks, they're pretty strong metrics, right? We haven't been able to afford to really differentiate with strong customer care and customer success. So we would dramatically improve our systems and make additional hires, which would ideally have a positive impact on our churn and our expansion revenue. So there we go. I hope that was really valuable to you guys. Check out alexanderjarvis.com if you'd like the opportunity to work with me and have me kick your ass, or just, have a bunch of really great content and free tools to help you kick your own ass. Bye.